Hello, and welcome to another live session with FX Pesa. And today we'll be focusing on the NFP, or basically the US non-farm payrolls. The data is coming up a couple of minutes after now, and this will be exactly at 3:30 p.m. So we want to understand what it means and what it might imply in the markets, and also how we respond to this. So before we make any progress, I would like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. So hi, John. Hi, Fenwick. I hope that's the right pronunciation. Hi, Kenton. Hi, Kerry. Hi, Leonard, Mike, Jacob. Thank you, guys. Thank you for jumping right in. So today we're expecting a very important data point. So historically, this data release has caused a lot of volatility in the markets, and that's why it's very important that we focus on the data release today. So we can start right away. So I will begin by focusing on the economic calendar. So this is basically the economic calendar, the Forex Factory here. There's more economic calendars out there. I prefer using these. Has served me well over the years. So today, being the 4th of November, we're expecting US jobs data. So from this economic calendar, you can see the date, time, currency affected, the level of impact, description of the news, details, actual outcome, the forecast, as well as the previous data, and also a graph for the same. So let's jump right in and look at what we're expecting here. So there is a quite set. One, we're expecting Canadian data, employment change. Previously, or in the last 1 month, they created 21.1 thousand jobs. That was in October. And now we'll be, in September. Now we are expecting data for October. So unemployment rate in Canada stood at 5.2%. We're expecting this to rise to 5.3%, basically indicating an economy that is contracting. So average hourly earnings per month increased by 0.3% in the previous month. And in this month, we're expecting another increase of 0.3%. And this is for the US. So the key data point that we are focused on today is the non-farm employment change. So in the month of September, the US economy created 263,000 jobs. In this time, we're expecting a contraction to 197,000 jobs in October. So the actual data outcome will majorly be compared with the expectation here. So if it's higher than expected, then that's considered good for the economy. And also if it's lower than this, then it's considered bad for the economy. So unemployment rate was previously at 3.5%. We expect this to rise to 3.6%. So let's focus on the unemployment rate right here. So from the unemployment rate, you can see it was at COVID, March 2020, when there was lockdowns, rising all the way to 14.7. So since then, there has been a consistent drop in unemployment rate, meaning that the US economy was literally picking up until we bottomed at somewhere around this was 3.6 and then 3.5%. So when you talk about an unemployment rate of 3.5%, we basically describe this as full employment. So anything below 4% is considered as full employment in the US, means that the economy is very strong and everybody can easily find a job. So with this, the Federal Reserve Bank of the US has found it easy to continue hiking interest rates in order to control the rising inflation, which peaked at around 9.1%. And in the last 1 month, it read at 8.2%. So in today's data, as we focus on an unemployment rate, we'll be focusing on whether the rise in interest rates is having an effect on the economy. So if the job data remains strong, that is, job market remains within 3.4, 3.5%, then the Federal Reserve Bank of the US will have more room to hike interest rates. We'll be looking at a couple of data points before the next meeting. One of them is job data. We'll be looking at GDP data, retail sales, personal spending, and all that to come up with a conclusion whether the Fed will be making a higher than expected interest rate hike, which would strengthen the dollar. So in this case, if the job market remains strong, then we're expecting the dollar to remain strong as a result of a strong rate hike, 4% or even higher, then in that case, we would be interpreting these as the economy is slowing down and the Fed could become more lenient in terms of rate hikes. And in that case, we'll be expecting a pivot, which would weaken the dollar on some of the major currency pairs in the market. One of them will be pound USD. We expect the pound to be quite volatile in this session here, and this should be happening within the minute. So whenever there is a news release, it's pretty important to jump into the 1 minute time frame because you can often see a very strong volatility in the market. So what we are seeing here is the pound jumping downwards, basically implying a strong dollar, and a strong dollar would be as a result of a strong jobs market. So at the same time, we are still waiting for the data to be released. So my economic calendar has not yet updated. So I'm just refreshing my economic calendar to see the outcome of the data. So here it is. So this is what you normally get. I get this refresh button here. And once the data is updated, you're able to tell what has just happened. So unemployment has just jumped to 3.7%, meaning that the job market is getting worse. And if it's getting worse, then we expect that this combined with other data points or economic indicators would tell that the rates are having a huge effect on the job market, perhaps even the housing market. And this should contribute in advising the Federal Reserve Bank of the US to go slow on the interest rate hikes. So this will be a key data point when they are making the next decision about the direction of the economy. So besides this unemployment rate, we also focus on the non-farm employment change. So in the previous month, the economy created 263K jobs. We expected a slowdown to 197K, but in this case, what we are seeing here is 261K. So this basically means that the economy is still strong, creating the same jobs at the same rate as last month. And we know that when the economy created 263K jobs, the Fed went ahead and basically hiked interest rates by 75 basis points. So from what we are seeing here, if I zoom into this year, you notice that the economy was creating more jobs when you are during the recovery period, and then this started slowing down. But if you compare this month with this data with the last month, then it's almost the same, meaning that the economy is quite strong in the US. So this builds a strong case for a strong dollar as a result of the expected rate hike on the next month, and that should be December. So when you focus on the markets right now, as a result of this, then you can see there was a sharp spike. The market seems to be reversing, indicating a weak dollar. So if you go to Euro USD and you jump into the 1 minute time frame, you can see there was a big spike downwards, and then the market reverses. And as we all know, this is often not the best time to enter the market. You are always wanting to be patient so that you avoid all the volatility and enter only when it makes sense. So if you look at gold, a very strong spike downwards. If you measure the number of pips, this is roughly 90 pips. So, and then the market reverse immediately. So still very close to the same level here. So it seems like the market is having mixed reactions. So when you talk of mixed reactions, it's as a result of the two contrasting data. So the US created jobs higher than expected, which is the 261K. But at the same time, the overall unemployment rate basically moved higher to 3.7%. So remember, 3.5% was a 50-year low, implying a very strong US economy. So besides this, sorry for that. So besides these, we also have the average earnings month over month. So the hourly earnings or the wage rate basically moved from 0.3% to 0.4%, meaning that people are getting higher pay as a result of the inflationary adjustments within the economy. So wages are rising, more jobs are being created, but the overall unemployment rate is getting smaller. So basically meaning that there is a higher percentage of people who are looking for jobs. So in terms of description, this is a change in the number of employed people during the previous month, excluding the farming industry. So just want to move to the percentage here real quick. So percentage of the total workforce that is unemployed and actively seeking employment during the previous month. So in this case, you can see this number rising doesn't seem like a good indicator, but the rest two seem to be indicators of a good health and healthy economy. So now, when it comes to trading and looking for trading opportunities here, you can already see the whipsaws here. So on one moment, the market strikes all the way down, the other moment strikes all the way up, indicating a mixed reaction and basically what we describe as a whipsaw. So in a whipsaw environment, you want to avoid that. Remember, we had something similar in the news earlier this week. That was on Wednesday, where the market shot up and then eventually moved in the opposite direction. So these will eventually come down and will have a very key direction in the market, especially after these first 30 minutes. So by the time we get to 4 p.m., we'll have a clear direction of where the market is headed. So clearly, you can see gold is strengthening against the dollar is weakening. If you look at Euro USD, strongly strengthening against the dollar as the dollar weakens. If you look at pound, doing the same thing. So it could be a similar story as we had here. So market shoots down and then goes back, shoots up and then goes back. So that's my expectation at this stage. So besides this, if you look at the USD JPY, which has been one of the most volatile pairs in this recent period, shot up and then back down, and then it seems like the market is going back to the starting point. So this is something that can be quite normal during data releases. So my personal advice, whenever you're trading these data releases, the first thing that you need to know is that these sharp spikes can induce you to go for an unreasonable risk in the market. You shouldn't do that. You should always try and remain within your risk parameters. So you don't go for a risk too big just because you saw a big spike in the market. So once you get that covered, then the rest is easy. It's just about being patient and waiting for the right moment to make a market entry. So as we proceed, if you have any questions arising from the presentation, feel free to type those questions in the live comment section and I'll be responding to that right away. A good question here. Are we selling the UG? That is, what currency is that? I assume you're talking about GU. That is pound USD. Hello, Rufas. Welcome. Instant highlights. So let's look at this real quick. So one key thing to notice is that the dollar index seems to have stopped around this area here and is moving in the opposite direction. So one key thing to notice is that we are trading at a resistance level. So if you look at this particular trend line here, though we had not yet hit resistance, it seems like a reasonable area to think of a topping pattern, especially when you consider the overall trend in the dollar index, which has been slightly bearish. So having experienced these sharp momentum towards the upper side, hitting this resistance, and now the dollar index weakening, then this could be a case to look for a position in the opposite direction, where basically you're betting again for the weakening of the dollar. So if you look at pound USD, and now we move to a higher time frame, you can already see there has been quite a similar pattern here. So besides the flag that you are focused on, if you look at the 4-hour time frame, we have had this pattern display very well here. So this seems like the pattern here. And from this pattern, you can observe one thing. The market broke towards the lower side and then retested the area. So the retest is quite clear. Market moves in the opposite direction, hits resistance, and now potentially it could be going down. So from the data release and what we are seeing here, is that the market was expected to continue moving down, but the pound seems very, very strong. Remember, there was a 75 basis point hike yesterday, and this was a bullish for the pound. So with this trend, if the market was to close towards the upper side, then it would be a strong signal to go for a bullish position. So one key thing to notice here is that there's a liquidity grab that just happened here. So when we talk of a liquidity grab, we know that there's a lot of traders who had set the stop loss based on this previous low. So by the market going straight down, triggering these stops and moving in the opposite direction, then the buyers is established towards the upper side. So now we expect the market to start now moving upwards. So a potential target, if the market was to close with a pin bar, then it would be probably yesterday's open or yesterday's low, somewhere around here, 1.13757. So a very interesting data point to be focused on, especially if the market closes here or even closes green. So in this case, it would be a best bet against the dollar and also a bet for the strong pound as a result of the strong rate hike that happened yesterday. So besides that, if you look at USD JPY, you can already see the kind of volatility we are seeing here. So a very strong rejection here on Wednesday. And now today, if the dollar manages to reject a high price, then potentially we will be moving downwards. So one key thing to notice is that for the last couple of days, this has been a significant resistance. So if the market is unable to break towards the upper side, then the assumption is that now we are headed lower. Seems like the market is within some form of triangle here. If you look at the movement up, down, then potentially a break towards the lower side would be the identifiable buyers targeting some much lower price, especially if the market closes near the opening price of the hourly candlestick. So this hourly candlestick is very important. Key focus should be on how the candlestick closes towards the end of the period. So looking at Euro USD, a similar thing. Sharp rise followed by pullback. So remember what I mentioned, this should not worry you. Market rallies up, trigger stops, moves back down. So the close of the hour will be the most important, and also the overall chart pattern. So if I was to just focus on the last couple of days and you look at the pattern and how the Euro USD has been trading, then it's quite clear that we have a divergence of policy between the Eurozone and the US, and this is basically bearish for the euro. So now, if you focus on this and that the market attempted to go down, failed, moved back up, then there's a potential that the Euro USD could continue rallying. So potentially hitting resistance. So in this case, it doesn't seem like a very good opportunity to go for a buy trade. But if the market was to hit this area, then betting on the reversal would be a much more important bet rather than looking for a buy trade, expecting the market to go all the way up. So it's something that has been happening regularly. Market goes up, gets to the upper trend line, goes down up to the upper trend line, goes similar pattern happening on the upper trend line. And this is on 1 hour chart for intraday traders. So USD CAD seems like one of the most interesting pairs. Currently forming what looks like a horn or like a loudspeaker. The volatility has been widening since this bottom around 1.34952. So since then, you can see the large swings, and now it's at a critical support level. So if the market crosses within this particular trend line and doesn't break significantly, then looking for signs of bullish entry might be very important, especially if there was to be another swing here. So if there's another swing here, and then let's say you look for another position back up, then these are a pretty good idea. However, if there's a straight out break and the market keeps going down below the trend line, then the target would be just here, 1.34952, which was a low we experienced a couple of days ago. However, if the market was to reverse here and go up, then we assume that the market remains within the pattern and we trade upwards. So I hope that makes sense. Now that we are now focused on gold, very strong support level. I remember discussing this yesterday. So gold has basically made a very strong case for a very strong support here. And this is holding quite well. So now gold is testing a resistance level. This is something we discussed yesterday. I remember doing this. So this was acting as the resistance, and the current candlestick basically seems like a clear break. So on the other hand, it's also pretty much important to focus on these highs here, because it basically forms some sideways kind of consolidation. So if it was to excuse this momentum up and then back into the pattern, then a majority of this period gold has basically been trading sideways. So this is a 5, 6, 7, about 7 weeks. Basically gold just moving sideways with a very strong support at around 16.15 or 16.16 thereabout. So now the current candlestick and the strong momentum upwards basically implies a break, and the long tail towards the lower side is supportive of a bullish case. So if gold remains strong and keeps going up, then perhaps a nice target would be last week's high. So we can already see last week's high and also this week's high. So an area around here. So I'm looking at this. So this would be the potential target here. This high, or also this high here that we saw on Wednesday. So this bullish momentum might be expected to continue, and we could get to this target quite easily. So as for the US 500, that is the S&P 500, we had an inverted head and shoulder pattern. Market found resistance here. You can see the sharp momentum this week downwards, basically indicating downwards momentum. So we are still within the bearish pattern. So with the Fed remaining quite hawkish, then this reversal here for the last 4 days basically implies a very strong momentum downside. So the current bullish momentum is only an opportunity to go short. So even if the S&P 500 manages to rally way higher, then my bias remains towards the lower side. Strong dollar, weak equities market. So very sharp rally will only be important for looking for short selling positions. So in this case, if the market keeps going up, then well and good. My idea is to look for another short selling position. So you don't want to be selling low here. So you want to wait for the market to pull back and then create the right opportunity to go for a short selling trade. So this bullish momentum is very much welcome. I don't want to participate in the upwards momentum, but once I see weakness in this upwards momentum, then the idea is to go for a short selling position. So remember, the session itself is not a investment advice. This is purely educational to help you understand the key points as a result of the NFP outcome, and also understand the key or the important price levels to observe, especially when you're looking for trading positions. For instance, if you look at yesterday's high compared to this particular low here, seems like a pretty important point. So if you look at this level here, you also look at this level here. It has repeated twice. So it's a good chance that the market could find resistance here as it heads higher. And once it gets to that 770, then there's a good chance that we could be looking for a potential bearish position, marking a continuation of the original trend. So that's a key idea to be focused on. So as for oil, strongly bullish. There's a lot of factors that are influencing the bullish momentum in oil. So WTI has been quite volatile this week. If you look at the momentum from a low of around 87, now we are at 91. I expect that we will be easily targeting this area here, and the previous high is roughly $92. So from what we are seeing here, I was to remove these two, and you draw a trend line along these highs, then you'd notice that the market has basically indicated a breakout. So seems like this was clearly thinning. So high volatility keeps getting smaller, and then eventually a break. So this break towards the upper side basically implies around $92 per barrel. So in this case, I wouldn't be selling into this strength. So if you are still in the trade, it's well and good, you keep holding. If you are not in the trade, it's already too late to make an entry. Pullback might happen at around $92 per barrel, but as for now, the bias remains towards the upper side. So that's it for oil. I'm also strongly $100 per barrel. So I'm quite bullish on oil. So another key thing to consider is that the longer term trends have already been broken. So if you look at this trend line here, it was broken right here. And if you are proactive in these trend lines and you adjusted your trend line here, this one too has been broken. So basically implying that we have a very strong momentum in oil and also a reversal. So this is basically a bearish momentum that lasted a couple of months since April. Market found a bottom here and now seems to be strongly aggressive, moving towards the upper side, especially as the US runs out of reserves that it has been drawing since March. So now a very strong momentum in oil, expected to rise to $92 and perhaps potentially $97 and $100 after that. So that's it for today. I'll be checking if you have any questions. Silver strongly correlated with gold. You can see the sharp break here doesn't seem to be having a reasonable stop. So it seems like it's a free flow higher, potentially targeting all the way up to these levels here, and also an in-between level somewhere around here. So $20 seems to be a very psychological level for silver. So as long as the US dollar keeps on weakening, then this will be very strong for silver. Remember, it's a commodity that has been quite undervalued for a period now. And at the same time, you can see a pattern that has been developing here, basically implying an inverted head and shoulder. So if you consider the inverted head and shoulder and this to be the neckline, that is $20.8, then you'd know that this was the basis for the first shoulder. Then this was the basis for the head. Remember, this is an inverted pattern. And then the other shoulder, after getting to the neckline here, is right here. So if the market keeps moving this way to complete this particular pattern, then there's a real opportunity that silver would rise from the current level of 20.2 to 20.835. So a very interesting perspective here. I expect the bullish momentum to continue. So we have already covered oil, we have covered gold. I think I've answered the question from Thenge. We focus on a sell in gold, right? Yes, so at some point gold will start selling. So you have to be aware of that. So let's check this. So these sharp momentum, if you are to buy, the best opportunity would be right here. A little bit late would be after the strong green candlestick here. So this was a very strong momentum. Maybe if you bought here, then you are still within the profits. Then buying here, you can already see there's a strong resistance here. So just to highlight, notice this is a strong resistance here and also here and also here. So right now, since the move has already happened, the idea is to look for weakness and trade in the opposite direction, especially betting on a strong dollar, which would be bearish for gold. So there's this high here, which would be a potential selling zone. And also there's this high here. So it's an issue of just focusing on price action, look at weakness. And when you observe weakness in the market, then this could be the beginning of a short selling trade idea, and then you can execute a very easy trade without the hassle of the volatility in the news. So that's it for today. I hope I was able to provide value. So as you can see, pound is still struggling around this area. So in this case, if it struggles to break this area, remember it was a very important breakout. So if I was just to highlight again, moving up, down, and then breaking this level right here. So if this is still within the retest area, then the potential for some further downside is still there. And all you have to do is to be patient, observe price action here, and look for a short selling trade, especially if we see more weakness here. So USD yen, you can already see dollar weakening against the yen. Seems like a breakout here. So we'll be observing the close of the candlestick. If there is weakness or even a pin bar after this, then we could be trading in the opposite direction. So Euro USD rapidly approaching the resistance level here. So price action around this area might be important in looking for a short selling trade. So USD CAD seems like a strong break. So the support level here now becomes the target. And this is the price level around 1.349. So it's also pretty much important to also focus on the weekly low. So this is the lowest we have seen here. So if we see some reversal in the next 1 hour, then we should be trading higher, betting on a strong dollar. So the dollar is weak, but it's not going to be weak forever. So betting on a strong dollar is basically about being patient and waiting for the opportunity to trade when the dollar weakens to a key price level. So dollar index weakening, I don't know if this will last for long, but if it keeps pushing further down, then the idea is to still look for buying positions for the dollar. So same case with silver, strengthening against the dollar. The strength can be observed. You can already see we're already approaching a key price level. So at already 20.2, as mentioned, we could be seeing the market rallying all the way up to 20.8. But then if a weakness appears, then that would be a potential to go for a short selling trade. So how do we tell there's a weakness? A weakness would be signified by something like this. So a candlestick such as this one, notice the red candlestick with a long tail towards the upper side, indicating a rejection. This would be a nice idea to go for a short selling trade. So also a bearish engulfing, if you know your candlesticks, would be very nice looking for a short selling trade. An evening star would also work. Long tails towards the upper side. Like in this case, we have what we call a dark cloud cover. If you know your candlesticks, market opens with a gap, pushes down more than half the previous candlestick, and then from this price keeps going down. So now you should not be worried of the strong green candlestick upwards. The issue is to be patient and look for a weakness candlestick indicating a reversal in trend, and then make an early entry towards the overall downwards direction. So this is pretty much important. So all you have to do is to be patient and observe price action around this area. So thank you very much, guys. Thank you for your time. I hope this provided value to you. Hope to see you guys on the next session. So gold has struggled to break the 1 week time frame. Of course, that's true. So with gold, we have seen the bottom here holding strongly. So this bullish momentum has already gone. It has already happened. So I wouldn't ignore this movement from this bottom within yesterday's midday to today. This is around 4,000 points or 400 pips. So now we should be looking for weakness in a trade in the opposite direction. So a key indication would be something like this. Notice the strong rejection here. So the strong rejection was the idea to trade downwards, and followed by these, you can see that the market changed direction and went all the way down here. So if something similar was to happen here, then it would be an idea to go for a short selling trade. So it happened here, happened here, happened here, and here. So there's that potential it could also happen here. So it's just a matter of being patient and observing price action. So thank you very much, guys. See you on the next session. So before I end, I would like to give a big shout out to Silva Arali from Uganda. Thank you for attending the session. I appreciate you guys whenever you join these sessions, and also Nyakojo, Silva Arali. I appreciate you guys from Uganda. Big up. Hopefully we'll be able to meet in one of the potential future events in Uganda.